Hello and welcome to another Smaulgld live stream. Tonight it is June 30th, end of the month, 2018, and it is Friday? No, it is Saturday night. There you go. Okay, so it's Saturday night, June 30th, 2018. Glad we got that out of the way right away. All right, and the title of tonight's episode is End of the Petro Dollar, Long Live the Petro Yawn. Now, we do have some new information about the petrodollar. It's pretty significant information. We're going to get into that. But let's take a look first at what happened during the day. Now, today was a non-market day. I had to consider whether today was Friday or Saturday. Well, we determined that it is indeed Saturday. And there was no market trading in gold or the stock market. However, crypto never sleeps. And the cryptocurrencies built on their gains from yesterday. I think this is one of the few times in the past month or so the cryptocurrencies have had a sustained rally of more than 10 to 12 hours. They were up again today. I think Bitcoin was at about 63, almost 6,400 today. Litecoin broke above 80 after falling below 80. I think right now it's about 81. Ethereum about 450. I think Bcash is in the 700s as well. So we'll see what happens with the cryptocurrencies, and we'll also see what happens when we enter into July and how the markets react to what's going on. All right, so let's get at end of the petrodollar. Long live the petro yawn. All right. Now, let's just, for clarity, let's talk about what the petrodollar is and why it is and why people think that it will fail. So the petrodollar was set up after the United States went off the gold standard. And the reason the United States went off the gold standard, they tried Richard Nixon out there on TV and said he's going to temporarily suspend the conversion by central banks, foreign central banks, of their dollars to gold at the U.S. Treasury. And that was their right under the Bretton Woods Agreement, which made the U.S. dollar the world reserve currency that would be backed by gold and redeemable by foreign central banks. If they brought their gold to the U.S. Treasury, they would get gold. So the dollar was as good as gold. Now, this is just remember from our prior episode, live stream, the Bretton Woods Agreement was not really a gold standard the way they had in the classical gold standard, where every country marked its currency to a unit of gold, and then individual people in those countries could convert their specie or their dollars or their whatever they had into, they can get gold from their government, and that gold actually traded as a currency. So in the United States, you had gold eagles, double eagles. Countries around the world, their people actually had gold. The Bretton Woods Agreement was a central bank agreement, whereby central banks had the right to get gold, but the people didn't. Because remember, the Bretton Woods Agreement was signed at the end, close to the end of World War II in 1944. And at that time, gold had already been demonetized by the United States government in 1933, nationalized the gold, took all the gold coins out of circulation, made people give them in. They got their $20.60 for them, and then they revalued it at $35 by the Gold Act of 1934. Okay, so now we know what we were dealing with when Nixon went off the gold standard. And the countries were happy to have the world reserve currency as the dollar if they can get their gold. But they started to become a little concerned in the 60s that the United States may not have the gold available to convert because they were starting to run deficits. They were doing the Great Society, which was a social welfare program, the introduction of welfare and Medicare, Medicaid. They were also fighting the Cold War. They were trying to land a man on the moon with the space race. They were getting engaged in Vietnam with 500,000 people going into Vietnam. So the United States was truly spending on welfare warfare, probably for the first time since World War II, in a big, big way, really expanding that. And that was getting the signatories to the Bretton Woods Agreement nervous, and they wanted their gold. So in any event, Nixon went on TV and basically said, you can forget about getting gold, but the dollar is still the dollar, and don't worry about it. Well, the European countries, who were the big trading players at the time, said, no, we do worry about it. We want the gold, and the United States wanted to maintain that reserve status, so they went to Saudi Arabia with Henry Kissinger, and they worked out these petrodollar arrangements where the United States would agree to protect Saudi Arabia in the event of any type of invasion. And they were concerned about Russia, at the time it was the Soviet Union, that they would protect Saudi Arabia in any event of an attack on their country, and they would sell them military hardware. And all Saudi Arabia had to do was exclusively price their oil in dollars and only accept dollars. And what that did was it created a need and a demand for US dollars. Because at that time, the Europeans were thinking, well, why have the dollar? It's no better or worse than any of our currencies. We can just trade in our currencies. Why do we need the dollar? Well, the answer was, you want to buy oil, you're going to have a certain amount of reserves. So that kept the dollar where it was and actually managed to keep the dollar as the world reserve currency. All right, so that's what went on. That's what stayed. And at the time, Saudi Arabia was a huge oil producer, biggest exporter in the world, and the United States had dodged a bullet there. And then the United States continued as the world reserve currency. And other than minor grumbling, it worked. But then in 2008, 2009, when they had the financial crisis, and prior to that, the early 2000s and mid-2000s, the United States had begun to do very significant trade with China, and China started to accumulate massive amounts of U.S. treasuries. And that was all good. That was the plan. The United States was under the mentality that we'll think about stuff, and then overseas they'll sweat and they'll make the stuff, send it back to us, and then we'll send them dollars and they'll put them into treasuries. And that's how we can continue our deficit spending, because foreigners will now buy these. And China bought lots and lots and lots of them, up to $1 trillion of them. But when the financial crisis hit, the Fed went into overdrive and started printing money and doing QE, and that shocked the Chinese. They said, whoa, we've got all these treasuries, and you're basically purposefully undermining the value of our treasuries. And that's when the concept of de-dollarization began, that we can't just be all in dollars. This is riskier. We haven't seen this before. It was a wake-up call. I guess the Chinese felt the way I felt, for me, when the Indians, not that I'm Indian or that I have anything to do with India, but it shocked me that India could just overnight just say, the rupee that are out there right now, they're not going to be worth anything in 2 days. Basically, they realized they were at the whim of a central bank. And in the case of India, that told me that while I was, this was my not enlightenment, but what got me warm to cryptocurrencies was I did not like cryptocurrencies because they weren't backed by anything and they were just there just because. But so are national currencies. The difference between a national currency and a cryptocurrency is no one can just decide, well, the cryptocurrency is not worth anything. They can't recall them. There is no Bitcoin corporation or Bitcoin government. It is truly decentralized, and the only way it can become worthless is if people decide it's worthless. But one guy can't go on TV and just say it's worthless. So that's how the Chinese felt when the Fed under Bernanke started doing QE. And so that led a lot of people to believe that the dollar itself was now in trouble because it was starting to print money, it was starting to monetize debt, and basically devalue the currency. And those are all very, very valid complaints about the dollar, that they were debasing the dollar. Now, this is before the other countries started going into hyperdrive as well. And then they figured that if the dollar was weak, another anti-dollar argument would be, well, what if Saudi Arabia decides it's better off dealing with whomever it wishes to deal with in whatever currency it wishes to deal in? So if Europeans wanted to buy oil from Saudi Arabia, why couldn't they pay in euro? If Chinese wanted to buy oil from Saudi Arabia, why couldn't they pay with yuan? And that got people starting to think, well, hold on a minute here. In 2009, 10, 11, 12, 13, that here's the United States Fed going off, devaluing the dollar, and we still have this petrodollar. And because of the shakiness of the dollar and the concerns about not just that the Fed was printing money, but also the concerns that the U.S. was still ratcheting up its deficit, the unfunded liabilities, that, hey, it would really be kind of a death blow if they also lost the reserve status because Saudi Arabia decided, screw this. Why do we want to be in dollars? Why do we want to be allied with the U.S.? We could just trade wherever we want and in whatever currency we wish. All right. That all makes a lot of sense, and that's exactly what the narrative was. Things have changed. I'm not going to go through all the changes that have happened since then, but that story isn't as strong as it used to be. Because the United States, first of all, has stopped doing QE, has raised interest rates, and other countries have gone on credit binges and money printing, not to mention China, not to mention ECB, Bank of Japan, Bank of England. So they no longer have this concept that they need to be concerned about the U.S. because they need to be concerned about all the other fiat currencies that are also in massive debasement mode, massive trying to create inflation, zero and negative interest rates. Remember, the Fed doesn't have any of that now. They appear to be the prudent central bank because they're not printing money. They're trying to reduce the balance sheet. And right now, the U.S. has fiscal stimulus going on rather than this monetary policy, and the Fed has raised rates. So the Fed actually has 1.75% interest rates, and all the other central banks have basically zero or below. Now, the news on the petrodollar, the big news on the petrodollar today is, well, let me just step back and go back to October 2016. Another reason people thought that the petrodollar was really going to be a problem and go away was because the U.S. Congress had said that they were going to allow families of 9/11 victims to sue Saudi Arabia. Now, this whole thing has always confused me, is if Saudi Arabia was behind it, why did the United States invade Afghanistan? This didn't make any sense. It's almost like they admitted that it was Saudi Arabians who were involved in it, but yet why is Saudi Arabia an ally of the United States? Not a topic for this podcast, but just keep that in mind that in the fall of 2016, the Congress did vote, and Obama threatened to veto it, that they would be allowed to go forward. And Saudi Arabia said, if you pass this, if you indeed pass this 9/11 bill, we will, well, you know what we might do? We might dump our treasuries. So at the end of 2016, we're still fresh off of the Fed printing, and still some people lingering thinking that the Fed is going to reverse course and do even more QE. And that's what people are still thinking, well, the dollar's vulnerable from that perspective. That you still have the Fed threat of more money printing. You haven't gotten a handle on the deficit. And now you've got Saudi Arabia making noises that they're not happy with the United States. And at the same time, remember, we have the Iran deal. Now, for those who don't know, Saudi Arabia and Iran are bitter enemies. We'll get to that in a second. So when Congress passed this 9/11 thing, Obama vetoed it. And you would have thought, okay, well, now we're okay. Saudi Arabia should be happy. They're not, because, as I mentioned, Obama did the Iran deal. So there was good, valid concern that not only would foreigners dislike the dollar for obvious reasons because of the debt and because of the QE, but that also they might lose the backing of Saudi Arabia. And remember, countries need the dollar to buy oil from Saudi Arabia. If Saudi Arabia were to pull that and the dollar was considered weaker than all the other currencies, then you'd have a situation, you'd have a global pile-on. Now, it makes sense for a country like Iran or Russia, who are at odds with the U.S., to, quote, de-dollarize. Any enemy of the United States would do so. Why would you want to transact in those currencies? But the concern was I would think the more rational concern would be that the rest of the world would say, well, screw this dollar stuff. If I don't need to have them to buy oil from Saudi Arabia, and the U.S. Fed and the fiscal and monetary policies are reckless, and it's not backed by gold, then I don't need this dollar nonsense. All that makes sense. Now, what happened, though, was in recent times, and we're going to get to the big news of today. I haven't forgotten about it. The big news of what happened today that further strengthened the petrodollar was Obama did veto the bill, but the 9/11 bill, but Congress did pass it. And you would have thought, well, that's it. These guys have had it. They're going to dump their treasuries. They had even threatened that if the 9/11 bill passed, that they would dump treasuries. However, what happened since 2016 was, and since Trump became president, Saudi Arabia boosted their holdings from about, they almost doubled their holdings from about $90 billion in U.S. treasuries all the way up to $160 billion in April 2018. So Saudi Arabia, far from just dumping treasuries, they did the reverse after that happened, and I guess they realized that the United States is going to do what it does. But I think what it had to do with was Obama was gone, because Obama did the Iran deal, and Saudi Arabia absolutely got no relations with Iran. They have strained relations all along, and that has to do with a lot of it's religious. Saudi Arabia is Sunni Muslims, and Iran is Shia, and those two are at odds. And they're both oil producers, so there's some of that rivalry going on. They're not a historic rivalry because there is no Saudi kingdom historically, but they are, in recent history, they are bitter enemies, and it's very clear what happened. This isn't the latest story, but one of the latest things that happened is Donald Trump undid the Iran deal, and you can imagine that Saudi Arabia was very pleased, very chuffed about that. So now you have Saudi Arabia appearing to come back into the fold with the United States. You have them buying more treasuries. And then you have something that I've been talking about, that not only do you have the underpinning of the petrodollar reestablished somewhat through U.S.-Saudi Arabian relationships improving, but you also have the emergence in the last few years of the United States as a major oil exporter, which also means that countries need dollars to buy oil from the United States. So now you have the need for foreign countries, central banks, and so on, to hold dollars to buy oil, not just from Saudi Arabia, but also from the U.S., which is going to become a bigger oil exporter than even Saudi Arabia. Added to that is that the dollar is not as shaky as it was when you compare it to other central banks in the last 3 years. In the last 3 years, the ECB has embarked on a larger than the U.S. did a quantitative easing program where they bought bonds. Same with Bank of Japan, same with Bank of England, Swiss National Bank, all engaged in massive money printing, zero interest rates, negative interest rates, while the Fed has boosted rates to 1.75, and unlike all the other central banks, is not doing QE. And then also you have China, which has created more credit than all those central banks combined in the last 5 years. So the whole world, all the fiat currency central banks, China, Japan, England, Switzerland, Denmark, European Union, have all engaged in massive QEs and negative interest rates and credit creation like you can't believe. And the Fed isn't doing that. So the dollar isn't as bad when you look at it on a comparative basis. It's still not good. If the other central banks didn't exist and this is what the Fed was doing, you would still say, look, U.S. owes $21 trillion, $180,000 in unfunded liabilities. This is no good. It's unsustainable. Dollar's going to collapse. And then take into account if you lose Saudi Arabia, then the whole whole house of cards comes crumbling down. But as we've mentioned, we have a issue now in that there is not that problem, because The United States is no longer doing QE. The Fed has raised interest rates. The U.S. is on better terms with Saudi Arabia. All right. So what's the big news? The big news today is that Donald Trump had put out a tweet, which was very, very interesting. Now, we already mentioned that Donald Trump had undone the Iran deal. And that was probably very good news for Saudi Arabia. And I would bet the reason that Saudi Arabia started buying U.S. treasuries again was they probably had reassurances from Trump that he was going to do that. And Trump today tweeted out something very, very interesting. He said, just spoke to King Salman of Saudi Arabia and explained to him that because of the turmoil and dysfunction in Iran and Venezuela, I'm asking Saudi Arabia to increase production, oil production, maybe up to 2 million barrels, to make up the difference. Prices are too high. He has agreed. Notice he mentions Iran, which Saudi Arabia hates, and Venezuela. Well, Donald Trump hates both of those countries. He hates Iran, did the Iran deal, and Venezuela, we know he's gone after them as well. And he claims that King Salman of Saudi Arabia agreed. Well, if he's agreed, what does that mean? That means the petrodollar is alive and well. It means that Saudi Arabia, I wouldn't say jumps when the United States fall, but pretty much so. If the president is not making this up, there's always a chance he is, but if he's not making this up and he can call King of Saudi Arabia and say, do this, do that, well, the petrodollar is not dead. Now, let's go over to the petro yawn, as I call it. Now, there was a lot of talk back a couple of months ago. We're not going to get into the Goldbacked yuan, game changer, end of dollar hegemony again, but there was a lot of talk back then that there was going to be a yuan-denominated oil futures contract. That's where the conversation always should have been. It should never have been about gold-backed yuan or gold exchangeable on the Shanghai Gold Exchange. The one thing that was sure at the time and did happen, and something that I always said would happen because that's what was announced would happen, there would be these yuan-denominated oil futures contracts. And the idea was, and people read into this, it wasn't really because China wanted to crush the dollar and all this other nonsense and back it with gold. It's because they wanted some say over the pricing of oil, given that they're the world's largest consumer. It's different than saying they're there to crush the dollar and to back it by gold and it's going to send gold skyrocketing. None of that, if you read all the Chinese documents, none of that factored into, oh, but Sun Tzu, they would never tell you. No, it didn't even logically follow from what they were doing. They were trying to gain some influence, just like with the Shanghai Gold Exchange, influence over the pricing and the trading of commodities of which they are a major consumer. That's all that is. It never had anything to do with gold. But if you look at what happened since then, and it wasn't meant to buttress the yuan. It was never intended to give the yuan a boost. Well, people were claiming it was going to crush the dollar, it's going to knock the yuan down, and it was going to send gold skyrocketing. There was none of that made any logical sense. And gold didn't go skyrocketing because there was no gold component. There was no ancillary gold demand, no direct gold demand. And the yuan had its worst month in June that it's ever had against the dollar. And the dollar rose a lot. And really, it had nothing to do with the yuan-denominated oil futures contract. It's just coincidental that since they launched the yuan-denominated oil futures contract, that the dollar has taken off. Totally separate. But the point being, they actually expected that contract, that yuan-denominated oil futures contract, to boost the yuan. It didn't. It never was intended to. No one would have expected it to, other than the people who were pumping this whole story. That it was end of the dollar, crush the dollar, gold's going to go higher. None of that happened. And there was no reason to believe it would happen other than people trying to pump a story. So what you have now is the petrodollar, which was the story behind why people thought the petrodollar was doomed and, quote, the dollar's days were numbered, all made a lot of sense 2013, 2014, even as late as 2015, 16. But again, as I mentioned, if you're just joining now, you go back, a lot has changed since then, actually almost a 180. You have Saudi Arabia buying U.S. treasuries, Saudi Arabia listening to the president and increasing output, the United States taking away the Iran deal, the Fed increasing interest rates, the Fed reducing its balance sheets, and all the other central banks still doing QE, not all the central banks, but a lot of the major central banks, ECB, BOE, Bank of England, Bank of Japan, PBOC, Chinese, all creating credit still, buying corporate bonds, buying government bonds, and in the case of the Swiss National Bank, printing francs and buying U.S. equities. All that helps the dollar. You've got foreign investment into the U.S. stock exchange with central banks printing money, and all of them have negative and zero interest rates, and the U.S. pays interest on the dollar, on the holdings of the U.S. treasuries. So that's what's changed in the last couple of years, and I don't think it's caught up to people who are making their prognostications. And I think that the main issue that's going to happen going forward is if you're worried about a collapse, I would look away from the dollar. I would look closer at the ECB, the European Union, and clearly have my eyes on China. Now, I'm not predicting that any of those are going to collapse, but they're more likely to. But also keep in mind, all these banks work together, all these economies work together to try to ensure that none of them collapse. So I'm not predicting that any of them will, but I think the dollar is probably the last one to do so, if indeed you do have some type of issue. So that's where we are. I think that the petrodollar has reasserted itself. The Petro Yuan, or Yawn as I call it, I don't think is a threat at all. And here's why. This is the final point on bargaining power. When you're the buyer, you are the customer, and the customer is always right. So someone who is selling something to you, generally, you're his boss. You can tell the seller, in so many words, with your spending habits, how he is to treat you. So whether it's a coffee company or a department store, they have to meet your needs. And if they don't meet your needs specifically, that could be okay as long as they meet the bulk of their customers' needs specifically, and therefore in the aggregate, they are meeting market demand. So for discretionary purchases, things that you don't need, you're the boss. The consumers are the boss. You cannot get away with, like for example, when the post office doesn't make money, they figure, oh, well, we'll just raise prices. That's because they have a monopoly, and they can get away with that. But let's say Starbucks isn't making money, fewer people are coming to their stores, they don't like the bathroom, but whatever the reason, so they figured, oh, all right, well, we'll just raise prices another $1 to make up for the loss. Well, they're going to lose more customers. They don't have the ability to just tell the customers they're going to raise prices. Now, the flip side to that, though, is, I mentioned the post office. When you have a monopoly and you're selling something that people need or arguably have a limited need, like you need the post office, because the reason you need the post office is you may not send many letters, but when you do send a letter, ordinary post, you're not allowed to use any private carrier other than the post office. So they can raise the price. You need the post office. It's the same thing. It's the same thing with oil. You would think, well, China's the biggest, now has the biggest demand for oil. It just recently surpassed the United States as the largest oil consumer. And they even buy more oil from Saudi Arabia than they do from the United States. And you would think they'd be able to dictate their terms and say, look, I'm the boss. I'm the one who buys this from you. I'm the one you got to pay attention to. And if I tell you, you got to accept my terms, you would think that would be the case. But it's not. The reason it's not is because China absolutely must have oil. It's not like they're negotiating over whether they're going to get Hennessy XO cognac, or they're going to get Jim Beam liquor. They can make deals, and they can actually say, I'm not buying your liquor unless you accept yuan. I'm not buying yours unless you give me a discount. It doesn't work that way in the oil market, though. So the idea that China is going to go around dictating terms. Remember, the United States sells a tremendous amount of oil and natural gas to China. China's never, I guarantee, has never told the United States, you either take the yuan or we're not buying from it. What they have said is we'll put a tariff on your stuff, but that's not really showing anyone anything. That just means now they're going to have to pay more for U.S. oil or natural gas, which means they won't buy as much U.S. oil or natural gas, but then they're going to have to go somewhere else and pay the Saudi Arabia the same price for natural gas. Now, having tossed the U.S. over and basically hurt themselves and said, we're going to charge ourselves more money for U.S. oil, they don't have much leverage to go to Saudi Arabia and now say, we want you to charge us less and we want you to take the yuan. That's not going to happen. So anyway, that's why I think when they talk about the Petro Yuan and the end of the Petro Dollar, I think both of those theories are flawed. I think the Petro Dollar theory, end of the Petro Dollar theory, wasn't flawed, but has been weakened significantly by subsequent events that we've already talked about. And the Petro Yuan was never anything. It wasn't designed to back the Chinese RMB with either oil or gold. It was really just to get a foot in the door to talk about the pricing of the commodities. All right, that about does it for our discussion. Looks like we've had a lot of passive listeners, but not many comments. Pamp Bitcoin. Seems like an inside joke. It's like Pamp makes these little gold bars that they stick in sleeves, so I guess you can do that with Bitcoin. Annabelle, Switzerland is apparently mobbing to gold-backed currency. I don't know if it means Switzerland people, Swiss people, but the country certainly isn't. The Swiss National Bank has been trying to devalue its currency for years. They print francs, they buy assets. They actually make a lot of money in the stock market. How could they not? Whatever they buy goes up. They even own Tesla shares. But Swiss National Bank, PAMP equals pump. Okay. The Switzerland sold 60% of their gold just 15, 16 years ago in order to join the IMF. So I don't know what you mean, Annabelle, if you're saying Switzerland, the country, meaning Switzerland, the Swiss National Bank, or if you mean there's a movement in Switzerland. I know there was a Save Our Swiss Gold movement that failed about 2 or 3 years ago, where the populist referendum wanted the Swiss National Bank to buy that gold back that I mentioned they had sold, and then to back their currency with gold. But that failed, and I know that the Swiss National Bank was totally against doing that. All right, well, since we have no other questions or observations in the chat, we're going to cut it short now. But I want to thank everyone for joining tonight, and please be sure to join us again every night at 8 o'clock Eastern Standard Time here on YouTube. Oh, silver stocks, AGEKSPASS. Well, AG is First Majestic, EXK is Endeavor, and P, I think you mean PAAS, that's Pan American Silver. The silver stocks have gotten hammered, just as the gold stocks have. They've actually done worse than the metals, which is strange. But they seem to be picking up recently. Other than that, I haven't followed them that much in the last 2 or 3 weeks. Usually when you get a run-up in the gold or silver price, then the silver stocks will take off. You might want to look, Daniel. I did a YouTube, it was a live stream, but I was talking about the impact that the silver and gold streamers have had, not just on the gold and silver miners, but also on the price of gold and silver itself. I'm not going to go through all the details there, but if you go to the Smaulgld YouTube channel, I'll get you the exact title that you can look for. But I think that the streamers, if Royal Gold, Franco-Nevada, they have done far better than the miners themselves, and there's reasons for that set forth in that live stream. If you haven't caught that, maybe you want to check that out. The name of that video is, you go to the Smaulgld YouTube channel, you go to videos, and if you hit videos, it's down about, okay, it's called How Streaming Companies Impact the Price of Gold and Silver. It's in the 1, 2, 3, 4, 5th row down on the right, so you can check that out. And for those of you who are listening to this after I've added videos, you won't find it by those directions. Just type in how streaming companies impact the price of gold and silver. All right, Daniel, thank you very much. Thanks, KZ Gixer 1000, and thanks, Annabelle. We will see you for Lucky tomorrow. Thank you very much.